Every week, most traders flip through 15 pairs, 4 indicators, and a dozen strategies. But this week, I'm watching only 3 setups. I might hint on a few more, but that's just it. I'll walk you through exactly what I'm seeing, how I'm planning my trades, and why fewer charts equals better focus. These are high probability setups you will learn from and apply. If you don't know me yet, I'm Kojak's Pro, a trader with over 3.5 years of experience. I started out trading Forex the wrong way, going about clicking buttons, entering trades every now and then, not knowing what I'm doing. And that's the result of that. I blew a lot of accounts. I kept on recycling my old trading methodologies to the extent that I almost got wiped off from the game. As a matter of fact, I did document the video where I almost gave up trading because of a streak of losses. You can watch them right here. But that's the thing, your best days always come after your worst if you persevere. So in this video, I'll be walking you through 3 pairs on my watch list and how I'm going to get into them. So before we go on, I want to give a special shout out to Chukwudi. And I did say this in my previous video that I was going to give out a futuristic reference video to one particular subscriber who made a comment or who makes a comment. And I'm doing that in this video to fulfill that promise. So Chukwudi, you are the real OG. And I love you for being my subscriber. That's it. If you're new to the channel and you like this type of stuff, subscribe. Now let's get into the video. You see, most traders think more charts equals more opportunities, but it's the opposite. Overwatching causes decision fatigue and missed entries. I only need one clean opportunity to make the week worth it, or the month, as the case may be. And this mindset shift has changed my results and my stress levels. And I'll be showing you on this chart how to go about your analysis. So our first setup will be GBP USD. As you can see, guys, we are on our GBP USD chart. Without wasting so much time, if you know how my charting goes and how I usually love to go about my technical analysis, that I don't just start out on any time frame. I am of the opinion of having more than one time frame to make a bias, or to have a direction where you want to take your trades, so that when you scale down to your entry time frame, you know exactly what you're doing. So on this chart now, I'll have to go over to the monthly time frame because that's where I usually start my analysis from. So this is GBP and we'll be going over to the monthly time frame. I did talk about GBP in our previous chart walk, and I made it clear that GBP has been bullish for a while now. It did break our bearish trend line, and I highlighted that in the previous video. So all this while now, GBP has been bullish for a while now. So by the time I go over to the weekly time frame, you can see clearly here that we have a trend line. So this is our trend line. GBP has been on this bullish trend line all this while. So we had the supply zone right here, which GBP came back, broke it, and then retested it to continue soaring to the upside. So that's why GBP has been bullish for a while now. And I did remember categorically in the last video that, it's even right here. So I did draw this ellipse diagram right here to show that, because GBP were just trading around this region at that time, I told myself that if price comes to trade around this region, that there'll be no trades. There is no point trying to take GBP to the downside when you know it's bullish. That's going contrary to the trend. That anytime you're trading against a trade, it's as if you're not trading in the direction of the river. So in this case, I told myself that I'm not going to be taking trades that are opposite to what my major time frame bias is telling me. So in this case, what we'll be doing for GBP I told myself that we will only be looking for buy trades for GBP. So what are we watching now? We can see that GBP did something. It came here, it had a major break below, even traversed that entire area that was contentious, and now GBP is now trading down here. So what am I saying, or what are we looking at for GBP? Simple, because this trend line is still very much in play and valid, and we've had like the first touch here. This is the second touch of the trend line, and there's this trick in trading that says the third touch of the trend line always does the magic. So I'm waiting for GBP to do something iconic. It has to come back to give me a proper retest of this trend line. First of all, let it touch this trend line. And then if we do that, it might be very well getting ready for an opportunity to trade it. Because if I can look here, I'm just going to go over to the 4 hours to see this clearly, to see whether we have a fib zone in play. Just a moment. So you can see that it has dipped twice. GBP/USD has dipped twice into our fib area, which is the 0.5 region. So this was the first week it did that. Now it has come back again to properly, play around the 0.50 fib area. Now, in doing that, watch what it has also done. It has also given us the opportunity to draw a counter trend line. So this is the first touch of the trend line. This is the, I mean, this is going to be a bank trade if it eventually plays out. So all I'll be waiting for GBP/USD is simple. If it plays around this area, like so, this area, I'm just going to mark this out because that's what we saw in our zone. If it plays around this area like so, and gives us an opportunity to enter while breaking our counter trend line and break of structure, then I'll be very comfortable to enter into this trade to the upside. And if we do break that, I'll need a favorable risk to what to be able to get into this trade. It's as easy as that. That's how I go about my trading. I don't mingle sentiments. I don't mingle. I don't bring in hope into my trades. What the market is telling me is what I'm going to do. I see that GBP/USD is retracing to the downside. I'm not going to jump onto a retracement trade. No, I'm waiting for the trade to finish pulling back and decide to head back in the direction of the original trend. Then I'm hopping, as simple as that. And you might be asking yourself, how did I know that GBP/USD is going to stall around this area, which is this area marked, which is this black line? How did I know that this black line will hold? Simple. It still goes back to how you approach your trades. First of all, draw your major zones. So I've had my major zones marked out. I do that on my higher time frames like the monthly and the weekly. Now, on the weekly, if I just quickly go to the weekly, you will see something. On the weekly, right about here, you can see that this line, this black line, stands for the neckline of this head and shoulder pattern that saw GBP/USD tank to the downside. Now, this black line, I just drew it and let it run all the way. And I did notice that here that this trade has approached that neckline, and that neckline is likely going to hold. So that neckline represents what? It's now representing a resistance because GBP/USD has gotten there, held, and you can see on the weekly time frame, on the weekly chart, it's retracing back to the downside. So it's that neckline. I'll just quickly go over to the daily now. It's that neckline that is responsible. Is this neckline that is responsible for price stalling around this area because there's a lot of sellers right about here. Now, selling pressure is predominant at this region, and that's why GBP/USD has gone back to the downside. Now, that doesn't mean that we are not going to want to trade in the direction of our overall trend, which is bullish. But then we need to wait for sellers to exhaust their momentum and then let the interest for buying be kicked in once more. Then we get into a trade. So that's it for GBP/USD. Let's go to our next chart. So the next chart we'll be looking at is Bitcoin for this week. Now, in my previous video, I said something about Bitcoin. Bitcoin, everyone knows, is all-time bullish. If you don't know that, you know it now that Bitcoin is bullish. So if you are holding Bitcoin for a short sell or for a short, trade to the downside, you're doing yourself a great disfavor. You're doing your account a great disfavor. Exit that investment and look towards the upside. Now, Bitcoin, in my last video, I said that Bitcoin will have to come and break this line right about here. So in my previous video, Bitcoin was trading right about $107,000 per coin. I told myself that if Bitcoin, though I know is bullish, it will have to fulfill some criteria for me to actually want to jump into a trade for it. My interest for Bitcoin, as at the last time I made the video, had already been cooked in for a bullish move. But these are the parameters I set up in play. These are the psychology. This is the psychology of the game that you need to know. That your setup is your plan. Your plan is your edge. Your edge is what gives you the ability to trade this market in a highly probabilistic fashion and give you better trading outcomes. Now, my age here states that I will only be interested in Bitcoin, which I did specify in my last video, if it breaks above this horizontal line right here. And that horizontal line represents the $112,000 mark. I said to myself that if Bitcoin breaks above the $112,000 mark, we'll be gunning for more trades to the upside. And my next target for Bitcoin will be $139,000 per coin. Now, what has Bitcoin done in this fashion? You can see that yesterday actually, Bitcoin, the daily candle for Bitcoin got to that $112,000 mark and pulled back massively. You can see the wick right about here. So I'm just going to show you. So this is the wick for, you can see it got here, it approached that $112,000 mark and gave up a wick. The daily candle gave up a wick. That's to show that there is selling pressure there too. If you don't know how these work, you can see how my chart is exactly showing the character that is being displayed by both buyers and sellers in the market. Now, selling pressure usually comes at a point of resistance. Buying pressure comes at a point of support. You can see clearly that the bullish candle that gave up a wick for yesterday designated that selling pressure is much at that region, and that's why I want this region to be taken off first before I enter into buy trades for Bitcoin. As simple as that. So it's good to see that as at the time when I made my bullish interest about Bitcoin known, Bitcoin was just trading at $107 per coin, $107,000 per coin. Now it has come close to that region. I will just wait to see that Bitcoin actually breaks above it convincingly. Then I hop into a trade. As simple as that. So Bitcoin, you're my next target. So the next pair we'll be looking at is GBP/JPY. That's the third pair for today, which I'm watching actually. Now GBP/JPY, in my previous video, GBP/JPY is all-time bullish, and in my previous video I said I wanted GBP/JPY to come back to retest a 50 pip area, to retest a support area, most likely the monthly zone. I showed that in that previous video, and give me the inkling to enter into a trade. Now, what will happen here? You can see that GBP/JPY did exactly just that. So this is the 50 pip area drawn like so. So Bitcoin came back to retest this 50 pip area, because then we're trading around actually GBP/JPY. GBP/JPY was trading around this region. Now it came over to the 50 pip area and retested it and held above it. So it saw this trade to the upside, which was a total win for us. So our predictions worked actually that it retested the 50 pip area. It also held at the support area, which is this area right here, and then it broke structure. So this was what it was. It broke the structure, retested it. It was a win up to the upside. So our first level target, as I remembered, the first level target I said that we're going to hit was around here, which is the 100% retracement. It totally smashed that. If you're doubting me, go and watch my previous video. I'll just put a link of it right here. We've smashed our first TP, and we are already trying to get a second opportunity for the next TP. And I said the next TP, after the first TP, I'm just going to check. After the first TP, the next TP will be, that's it, the previous supply area. So after the first TP has been smashed, which is what we've just gotten there, the next TP will be 208.075 for GBP/JPY. And mark it. Once that happens, that's what's going to happen. So that's it for my GBP/JPY trade. I'm happy that the first TP has been hit, and I've come here to document it as well. Now, what are we waiting for GBP/JPY? Simple. I still need this particular trend like so. I'm just going to draw this trend you can see here. This trend line. You see this trend line you can see here? It shows that even in the 4-hour time frame, GBP/JPY is respecting the high time frame bias. Now, I want this lower time frame trend to come to a level and stall like it's done so, and also come and give us a 50 pip as well, and give us a break of trend line as well. Then a counter trend line break as well, and also a break of structure. Then we'll jump into the trade. I do have reservations about the next trading opportunity though on GBP/JPY. I'm going to show that, because a profitable trader always trying to analyze against yourself, even though most times you don't need it, but it kind of makes you open to the possibilities the market is presenting to you. If you are oblivious of it, that's when you might get, slaughtered by the market's perspective on things. So in this case, I'll be looking at the contrary perspective to GBP, and what's giving me some concerns. I'm going to show you that now. So this is GBP. I'll just quickly go to the daily time frame. You see exactly why I'm being concerned about the next trading opportunity for GBP. Even though it seems like we have a trend right here, you can see that we have a trend to the upside, like so, nice and smooth. And on the daily time frame, we have had a proper retest, something we've not done in a while. We have had a proper retest of the monthly zone. So this was a break above and a proper retest of the monthly zone, and it's going to the upside. Fine. So everything is going towards the direction of the monthly bias. Now you can see that GBP has reached the previous supply region right about here with this move it made here. So all I'm seeing is that this region is going to hold for quite a while. So I will be cautious with making more trading opportunities below this zone. But if we did come here, smash it and break above it, then I will not hold any reservations whatsoever to enter into my next trading setup. But we have come here and we have held, and it's giving me a bit of a concern. But then that stands. If ideally we break above this zone, then I'll be trading more and more. If we don't, if I'm going to enter into any trading opportunity to the upside below this zone, I will reduce my risk. Simple. That's how you do it. You reduce your risk. So if usually you trade 3% per trading position, in this case, because the risk is not in your, the probability is not in your favor entirely the way you would want it, you reduce your risk maybe to 1%. So in this case, if I reach 3%, I reduce it to 1% if we're trading below this zone. But if we eventually break above the zone, you increase it further. As simple as that. So if you trade 1% ideally on every trading position, in this case, any trading opportunity you get below this zone, you reduce it to 0.5%. Keep your risk simple and minimum. That's the pro tip. Get it now, apply it. So that's been said about the trade pairs I'm watching now: GBP USD, Bitcoin, and GBP JPY. All said. Now the pairs I'll be just talking on briefly are our Euro USD setup. So let's quickly look at USD. You can see that USD has come to a monthly zone. We are still bullish on Euro USD, but we have gotten to a monthly zone and rejected there. So price usually does something. It gets to a key level and rejects. When it rejects, it comes back. It will want to go and reattempt a retest of that level to see what that level will hold again. So in Euro USD's case, I'm going to stand on my hands now and wait for this retracement to be complete before I jump into another trade for Euro USD. Now you can see that we have a trend line right about here. So this is the first touch of the trend line. This is the second touch of the trend line. Probably if the trade comes somewhere about here and gives us a third touch of the trend line and gives us an opportunity, then we'll jump into the trade. Let's quickly look at the weekly time frame to see what's happening on Euro USD. So you can see clearly that we have rejected that zone nicely. We are still bullish for USD, no doubt. We are bullish for USD, but that zone is holding quite strong. So as a matter of fact, I'll be waiting to see if we get that kind of opportunity. Now the next pair I'll be looking at quickly is gold. There's really nothing much to touch up in gold actually. Gold is not giving me the vibe, but I'll just point out something here. You remember this trend line we drew in our last video, and I told you that I'm not going to be looking towards flipping my bias for gold until a certain criteria has been met, and that is if this level is taken off. Now gold has been bullish for a long while. You shouldn't be thinking about a sell trade on gold. And don't even jump into quick sales as well, because you're going to get crushed by gold's momentum. Now you can see that this trend line, we drew this trend line and the price held here. It went above and it's still marinating this zone. Like it's marinating the trend line, because it knows that this trend line is something, it's authentic. But that doesn't mean that if this trend line is broken, you should hop into a sell trade. No, you're still going to be shooting yourself in the foot if you do that. What you should wait at actually, you should show ample patience for gold so that you can get good trading opportunities. If you want an advice from me on how to trade gold, I will suggest you keep on trading to the upside. It gives more probability in that direction. But if you are trading to the downside, you only have to wait for this level to be taken off. I'm going to say that again in this video so that you stop trying to force trades and eventually blow your accounts. So that's for good. I do have a pair again, and that's going to be the last pair for this video actually. ADCHF. So I'm just looking at ADCHF. Now, initially we did have a trade on ADCHF, and we have come to a zone now. We've come to a zone now, and this is this zone right here. I'm just going to take this off. So I expected ADCHF to get here, get to this zone and give us an opportunity to trade. So we got the first opportunity and made some profits to this 100% retracement. Now I'm expecting ADCHF to give me a better retracement, so that I can be able to jump into more sales, because ADCHF is flowing south. ADCHF is flowing south. GBP CHF is also flowing south. They're all flowing south. So how actually NZD-CHF is flowing south, not GBP-CHF. And I was watching this earlier on this morning. I saw the way ADCHF has been behaving for a while now, because as a first trader, how you can tell if the next opportunity or trading opportunity you get will be smooth and clean. You just look at the previous ones. I saw the way ADCHF has been giving previous opportunities. It's not very clean and sleek, but I did see this one and say, this one gave me the chance to draw this counter trend line. And that means that before this counter trend line is broken, the market will have to finish playing around this zone before it actually comes to break this counter trend line. And that's fine. It's fine to do the waiting game. And that's why I'm a swing trader, because swing trader allows me to stay off the charts and allow the market to do its thing, and then eventually come knocking on my door saying, "Hi, Kojaks Pro, we're about to move." And then I roll with it. Simple and straightforward. So now you can see that we've broken above this zone, and let's just see whether we have a 50 fib that has been broken. So I was looking at this area initially. And that stands for that zone. That kind of coincides with that zone. Now we'll be going over to the next fib area, which is this one. So this is going to be the next fib area we're watching. It's still broken above it. So that's why it's not on my first trade for my watch list for this week, because as far as I'm concerned, ADCHF will take for the next 1 or 2 weeks or even 3 weeks to give me this setup which I need, and that's fine. That's why it's not on my first trade, like I said. As simple as that. So that's it. So as a recap, on GBP/USD, we're waiting for a clean retest of this demand zone that has been drawn, and then a break of the counter trend line and break of structure, clean. And for Bitcoin, a break above this $112,000 mark, and we're good to go. For GBP/JPY, first TP has been smashed. Ideally, I'll be waiting for a break, like I said, above this zone, and then we'll be able to take it to the next zone, which is going to be at the 208.000 mark, ideally for GBP/JPY. But then it could still retrace to the downside. Let's go over to the 4-hour time frame, where we just have to wait for a retracement to somewhat this level, like so. So if it comes down to test this level and holds above it, then we can now go to the upside, like so. And in this case, if it does this, because it's trading below that mark, I'm only going to reduce my risk. Then we'll have a trade back to the upside, like so. So that's it. So my weekly plan is intentional, not reactive. The focus is on quality, not quantity. And let price show you. Don't predict, prepare. If you want to follow this breakdown style each week, I'll be happy to prepare them as we go. Meanwhile, grab the weekly chart breakdown sheet, which is a free template that lets you track setups, confirmations, invalidation zones, and more. Link in the description. And if you want to see how these setups actually played out, make sure you're subscribed. I'll do a full breakdown next week. If you have any questions, comment below or shoot me a DM. I'll be happy to respond to you. See you in my next video.